How's it going? Today we're going to be looking at ASML stock. We're going to look at their most recent earnings report as well as what you can expect with their next earnings report coming out July 16th. But just a quick summary of what this company does. They're an innovation leader in the semiconductor industry. We provide chip makers with everything they need, hardware, software, and services to mass produce patterns on silicon through lithography. So you are looking at the AI trade being involved with ASML, and they have had some phenomenal revenue growth recently. We're going to take a look at March 30th, 2025. That's their Q1 earnings, and compare that to March 31st, 2024. Note that this is in euro, so understand that there is a currency difference if you are American, but we'll also look at those American currencies as well. So we'll understand that. As far as total net sales, though, I want you to pay attention to what the overall increase is. So they grew net sales from $7.7 billion, or billion euro in March 30th, 2025, compared to about 5.3 euro March 31st, 2024. Their total cost of sales has decreased a little bit quarter over quarter, but so did their revenue. But overall, their margins have expanded, and we'll take a look at that in a second. This company is becoming very much more profitable. We can see their net income increased to 2.35 billion euro compared to 1.22 billion euro as of last year. So very solid growth in net income. Net income had almost doubled year over year. So that is very strong growth and profitability, as well as their diluted net income per ordinary share. You're looking at €6 per share compared to $3.11 year over year. So almost doubling that earnings per share. Very strong growth with this company. And we can see that with their margins as well. Extremely impressive growth with their margin expansion. And I want you to note too that most of these margin metrics did actually improve quarter over quarter. Despite less revenue, they did actually have stronger margin performance in some categories. We can see that gross profit as a percentage of net sales actually increased from 51.7% to 54% quarter over quarter. And if we take a look at last year as well, that was still at 51% overall gross profit as a percentage of net sales. So really impressive stuff there. That is very strong performance. Net income as a percentage of net sales also was very impressive. Quarter over quarter, it increased from 29.1% to 30.4%. And year over year, you're looking at an improvement from 23.1% to 30.4%. So very impressive stuff in terms of net income growth. This company is very profitable, and I am very impressed overall. You can see they've also improved their overall cash as well. They had about $9 billion in cash this quarter, compared to last year they had 5 billion euro in cash. So very impressive stuff there. You can see assets also increased by about 4 billion euro as well. And their liabilities, not too much debt added. Actually, debt decreased year over year. So you can take a look at that. 4.6 billion euro a year ago, and now they're down to about 3.7 billion euro as of this last quarter. So really impressive stuff. They decreased their long-term debt. This company's balance sheet is looking very healthy overall. I'm very impressed with their growth and margin expansion. So I think there's a lot of good things going on with this company. Of course, we need to take a look at the valuation, and then we'll look at what you can expect as far as outlook. Valuation's not too bad for a company involved in semiconductor manufacturing. You're looking at a 32.4 current PE and a forward PE around 29, which Seeking Alpha gives that B minus. So very impressive stuff as far as a valuation. So I'm very impressed with this company overall. You can see Seeking Alpha analysts are giving it a buy rating 4.03 out of 5, Wall Street buy 4.12 out of 5, and Quant's giving it a hold 3.15 out of 5. As far as what you can expect with this next earnings, so in their last earnings, they beat earnings per share. And note, we are back to US dollar. They beat earnings per share by 29 cents, and they beat revenue estimates by $84 million. Very impressive stuff. As far as this upcoming quarter's earnings, you're looking at earnings per share of $6.08, and you're looking at a revenue around 8.91 billion. Of course, this last estimate was way off. You can see the massive beat that they had. You can't put too much weight as far as into the estimates, but what I would encourage you to consider with this company is the pretty attractive PE, a good valuation overall in terms of PE, margin expansion, as well as strong revenue growth. And this company is taking full advantage of the overall growth in AI as well as semiconductors. You see NVIDIA performing very well recently. As far as a 12-month outlook, 41 analyst ratings, 68% buy, 29% hold, 2% sell, a median price target of $846, which would be about 8% upside from current price. And on a high end, you're looking at 40.6% upside, looking at $1,100 per share. Overall, I think this company is very attractive. I would certainly purchase it. You can see it's also in a pretty good spot in terms of like where to buy it. It's off those recent highs that were in June, not too recent, about a year ago, those highs that were accomplished in June 2024. Since then, the stock has come down a lot. But overall, I think that's at an attractive valuation for a company growing very quickly. So please let me know your thoughts in the comments. Do you think that this stock is attractive? Let me know your thoughts, and I'll see you on the next one.